Rod Crandall here from USAdvisors Insurance. Thank you for tuning in. Also want to thank you for your business on behalf of the entire staff here. We do realize that you have choice on where you place your business, and we're glad you place it with us. So today in the next 5 minutes or so, I'm going to talk to you a little bit about how to effectively utilize corporate-owned life insurance inside of your practice. It's going to be a very big picture overview today. Corporate-owned life insurance is often shortened to COLI. That's how I'll be referencing it, C-O-L-I. So in the short video today, we're going to determine what is COLI, who should consider owning some and why, how would you know if you're working with somebody who should consider owning some, and what's in it for you, the advisor, to even bring this up. If after this call this resonates with you, I'll be offering a 30-minute call to talk to you more fully about these strategies and help you determine how to appropriately integrate this type of strategy inside of your practice. I'm really excited about this strategy overall because no strategy allows me to live my personal goals better than this. So I follow the platinum rule, which is to the extent that I understand and meet your needs, then my needs are met. Well, when we look at this kind of structure, we get to do what's in the absolute best interest of the client. We get to utilize what is very likely the best structure from a cost standpoint for insurance in the entire industry, and then we get to drive significant revenues to our practices in so doing. So that gets me pretty excited. So with that, in order for us to understand what corporate-owned life insurance really is, we need to go back to basics just for a minute. So hold with me if this is a review for many of you. But when people generally think of life insurance, the first thing they think of is term insurance, which makes sense. Term insurance, if you think about it, what we want to do is we want to buy the largest benefit available with the lowest cost. Just like any commodity, we want the most for the least, and that just makes sense. But when we're talking about utilizing insurance as an accumulation tool, we want to take that strategy and flip it on its head. So what we really want is the least amount of death benefit with a maximum contribution. And in so doing, what we do is we mute the internal costs and we increase the net yield. And that's really what we're after. Okay, and so understand that we're utilizing that kind of design, but in this corporate-owned life insurance structure, these are owned by corporations instead of individuals. Okay, and we want to be able to structure these again in the most favorable way possible. In a traditional structure, it generally takes 7 to 10 years before your internal rate of return is effectively zero. Because of the high upfront cost structure for insurance, oftentimes they must be a long-term vehicle for accumulation, and in the short term they just don't work. Again, it usually takes 7 to 10 years to break even. Well, that's not the case in these institutionally designed COLI structures. We can get internal rates of return in the very first year. And this is very significant if you're a business, because by doing so we do not have to take a charge to earnings for the insurance. And for this reason, then these structures are balance sheet neutral. So the money that they had in a different account, they've moved into this account, and by the end of the year, they have all of their principal plus interest, depending upon performance. So let's think about this for a minute, because I do think this is pretty significant. So if you have a client that has a buy, sell, or key man policies in place, and they're being funded with term insurance, what we find is that term insurance is a bona fide cost, and it's a charge to earnings. And so what we can do here is we can potentially replace that term insurance, get the same coverage that we needed, and be able to get an increase in the yield for the dollars that are likely sitting in a low interest rate environment, whether they're in a savings account or an operating account, etc. Now, utilizing just term insurance isn't bad because the death protection is very good, and that can create key person coverage, facilitate buyouts, etc. But we can effectively take something that is an expense and create an asset out of it instead, which is really what we're describing this. And if you can do it in a way that is cash neutral on the balance sheet without a charge to earnings, this can be a very significant strategy moving forward. And frankly, many people are unaware that this can even be accomplished. So from a big picture standpoint, if this resonates with you, we have to determine, do you have anybody that should consider this type of structure, and how would you know if you should have that kind of conversation? So the main identifiers are generally, what business owners do I know? So we start there. But we need to go a little bit deeper. It's not just what business owners do I know, but what business owners do I know that sit on large reserve dollars for a specific reason. You can think of a bank or credit union, for example, has to sit on large reserves all the time. As you can imagine, they can't be loaned out. We can utilize structures like this in those marketplaces. It could also be a builder who has large bonding requirements, or a very profitable business that sits on retained earnings for some reason or another. I'm even aware of some continuing care retirement communities where they have to steward reserves because people buy into these facilities, and upon death they get part or all of their dollars back. So think of people who have to hold reserves in a safe environment for future needs. And if dollars need to be saved in a safe environment, then generally the interest rate that we can earn is very low, especially when it's safe and liquid. And so these types of structures can be utilized in part with those dollars. Okay? And so with that, if you'd like to learn more about this strategy and determine if you have anyone in your network that we should be talking to, again, I'm offering a 30-minute phone call. You can certainly talk with Shane or Andrew in our office if you prefer to do that as well. Look for supporting materials in the communication that this video gets sent out in, and we would love to help you understand how this could benefit you and how this could benefit your clients. And our experience is that if you just find one really nice case in this strategy, you might find that you have a really great year just in 1 month based upon how these strategies work and the revenue that is derived. So lastly, I just want to thank you once again. Again, we realize that you have choice on where you place your business. We intend to earn your business today and every day moving forward. Thank you so much, and make it a great day.